video, I would like to give a quick disclaimer. I am not a financial advisor. The content of my video represents my personal opinions and is provided for informational, educational, and entertainment purposes only. This information is not intended to be legal, financial, or an investment advice. As always, conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Hey everyone, welcome back to the channel. This week, all eyes on the Federal Reserve as we gear up for the much anticipated FOMC meeting happening on the 25th to 26th of January. With inflation and economic data still in the spotlight, traders and investors are bracing for potential signals about the Fed's next moves on interest rates and monetary policy. So what does this mean for the markets? While recent data hints at easing inflationary pressures, uncertainty remains high as sectors respond unevenly to the current economic environment. For swing traders like us, this creates both opportunities and challenges in navigating the weeks ahead. Stick around as we break down this week's market performance, analyze key trends, and explore how the FOMC decision will impact major asset classes. And as always, don't forget to like, subscribe, share, and hit the bell button to stay ahead with all the latest market insights. We are going to begin this week's video by taking a closer look at the US large cap stock ETF VOO, which has been showing some interesting price action after experiencing a 5.41 pullback within the month of December. Here with me on the TradingView interface is the price action for the VOO ETF. And what I have here is the monthly chart and the price action on the monthly time frame. And what I've been able to identify is this parallel channel where the price action has been moving within the last 1.5 years, starting from November 2023. And one thing I would like us to see is that from this swing low to the current close price, this upward movement corresponds to about 50%. So it's a 50% move from the swing low here in October 2023, which is very impressive. Now, let's add the volume onto the chart to kind of understand what is happening. Now, you can see in December we had a red candle, which is a bearish candle. And you can also see the corresponding volume, which I would say was quite high compared to the previous 3 months, which actually shows some form of bearish sentiment by the market participants in the month of December. Now, who were especially even expecting a Santa rally, which eventually did not pan out. And we're here on this channel giving you the key levels to watch out for. Now, we can see in January, we've been able to see that the price action is currently a bullish candle. And we've been able to recover the losses in December. In fact, the price currently is above the previous high in the month of December, which is very impressive following this negative sentiment. Now, my first point of concern is the corresponding volume. You can clearly see that the volume in January is still far below that in December. So it's as if this volume here, which corresponds to a bearish candle, is still the overarching theme. So yes, the price has rallied back, but I'm still worried with this selling volume because it's still dominating this bullish movement by the market participants. And you ask yourself, who are the people participating in January? Is it the retail traders or is it the big hedge funds? Now, what I'm going to introduce in today's video is a leading indicator called the Relative Strength Index. And now, from the name leading indicator, a leading indicator helps us to predict the future. The future price action. And now, that is what I want to use to evaluate this volume that is showing some form of concern. And so to add that on the chart, I'm going to go to the indicators and I'm going to look for Relative Strength Index, which is this indicator here. As usual, I encourage you to add it to your favorites. And now once I've added that onto the chatting interface, I'm going to turn off my volume for now. And also let's also delete this 49.23 price rally from the swing low. Now the RSI indicator and its corresponding chart is displayed underneath the price action, and you can clearly see that the RSI is showing you two curves, a purple line and a yellow line. What do they mean? Let's have a look. So if I go to the settings tab and I go to the style, you can clearly see that the purple line corresponds to the RSI, that's the RSI value, and the yellow line corresponds to the RSI based moving average. So the two curves displayed beneath the price action from the RSI indicator is the RSI line and the RSI moving average. Let's understand it better. In the inputs, you can see that the RSI uses a length of 14 and it's taking the source from the close, meaning the close price. You see, you can set other sources here, but the default comes with using the close price. So this means the RSI is calculated using the 14 previous candles and specifically the close price of the 14 previous candles. Since we are on the monthly chart, 14 previous months close price, it does some calculation which is beyond the scope of this webinar, but there is a mathematical formulation behind it and it gives you a value both for the RSI and for the RSI moving average. For the RSI moving average, you can see that the smoothing is a simple moving average. You can also change it from the type. You can use the EMA to smoothen it, or the WMA, or the VWMA, which all have different meanings. Now, let's close this. Now that we understand what we are seeing, what does this chart tell us? First of all, the RSI is an oscillator that oscillates between 0, or let's say for the sake of this graph, between 30, in fact, to be specific, 0 and 100. So it ranges between 0 and 100. However, there are two lines that are typically marked by traders, technical traders, which is the 30 line, which is this line here. Let's identify it, or to make it clearer for you all, I'll go to the style. I'll go to this RSI upper band, which is 70, and give it a different color so that we can identify it easily. And also the lower bound, I'm going to also identify it with yellow. You see, there's also a middle bound, which is the 50 region. So let's also give it a different color for the sake of this video. So if I press OK, now you can see the lower bound, the middle bound, and the upper bound identified on the chart. Now, how are these thresholds used? This is a very important question. So what typically happens is that when the price action, or when the RSI value, so the RSI value, which is the purple line, whenever it crosses the 70 mark, we say that the price action is overbought. So take us with like a rubber. When you stretch a rubber, you remember once you stretch it, the next step is for you to that much pressure or force that has been being stored by stretching the rubber band, you need to release it. So typically, when price is moving up and is approaching the 70 mark, you are saying that the price is being stretched, it's being extended, and it is overbought. So typically, what traders will do is once you get to the 70 mark, that's traditionally they start selling their positions because they believe the price action is overstretched and there's a high probability that the price is going to reverse, it's going to sell off. It's also a time where some traders will come and open short positions, meaning they are aiming to sell high so that they can buy low. Simultaneously, or in contrast, when the purple line, so let's for now focus on the purple line. When the purple line approaches below 30, we say the price action is oversold. And what people or traders will do is that they will start to initiate their buy positions when the RSI falls into the oversold region, because it's expected that the price will start to run up. So the concept behind the RSI is that technical traders believe that the price of financial instrument typically trades between a region that is oversold and overbought. And so this region here, which is in between region, is one of the best regions to buy an asset. A price asset is set to be bullish when the RSI value is above 50. So this is where the 50 value comes into play. And you can see for VTWO, the price action, you see mostly trades above 50 and is currently in oversold region. So let's look at the value currently. The value of the RSI is 72, which you can see here. So if we go back here, you can see that it's at 72, which is overbought. And so working based off the RSI, you expect is telling you that the price action is overstretched, and so a pullback. So the RSI is predicting a pullback. Now, one of the limitations of working with leading indicators like the RSI, like the slow stochastics, is that they are prone to false signal. So this is a signal. It's signaling to you, hey, this price action is overbought, is overstretched. You might want to consider selling your position. That's the message this is passing. It doesn't mean we have to act on it. Now let's go to the weekly time frame. So this is what is happening on the monthly time frame. Let's go to the next time frame, which is the weekly time frame. And now, what can we see in the weekly time frame? First of all, we can clearly see our parallel channel clearly. We can actually see that the bottom of the channel has acted as a region of support. 1, 2, 3. So this bottom of the channel has been tested 3 times. So this is a very strong support region. Similarly, the top of the channel has been tested 1, 2, 3, 4, maybe 5 times, or maybe 4 to 5 times. So this is also showing you this is a region of resistance, of major resistance. Similarly, I want to introduce to you this middle line here, which is called the midline. This midline occurs at the 50% mark of this parallel channel. Technical traders typically believe when the price action is below the midline, which is the 50% mark, sellers are in charge. And whenever the price action is above the midline, buyers are in charge. This midline also acts as a region of support and resistance. Let's have a look. Here, the price action started to reverse up, and you can see the midline acted as resistance for 2 weeks. Eventually, the price action broke out, and as it was trying to move up to, you can see this midline acted as support. You can see it has acted as support. So severally, it has acted as support. Here, it broke out, so the support did not hold. You can see that it broke out, but yes, the region still held, and the buyers brought it back up. You can see how it was tested for several weeks because we're on the weekly chart, but here it did not hold, and the sellers overpowered it, but it found support here. So you can also clearly see this 50% or this midline has acted as a key region in this parallel channel. And in my last week's video, I mentioned that this line here was a line in the sand, and this red line here, which was the minor resistance, was also a line in the sand. You can clearly see that the price action gapped above this downward slope and met resistance on this red line here, which corresponds to the resistance also in December. Also, this region here kind of corresponds, or will I say, converge with the 50% midline. So this area is also a region of convergence. You remember what I said about convergence? Convergence is a region where 2 or more school of thoughts come together. So school of thoughts, I mean, for traders who trade trend line, for instance, for traders who trade resistance, and for traders who trade this 50% line. So this area is a region of convergence, and is currently a region of resistance. Remember, resistance, you respect resistance until proven otherwise. Now let's get back to our chart. What I want you to see is that another way the RSI is typically used, apart from buying in regions of where the price action is oversold and selling when it is overbought, is also divergence. So what does divergence mean? Divergence typically means, in layman terms, means difference. So what does that mean? It means you are seeing a different behavior in the RSI and the price action. I remember I once said in my previous video, one of my previous videos, that every other indicator that we work with, name it the MACD, whatever fancy name it's called, it is derived of the price action and volume. That's how the RSI works. So what I mean is that you want to see the general trend that is observed in the price action in the indicators, specifically the RSI, which is our focus of today. Now, what does that mean? You can clearly see here that price has been making higher highs and lower lows. 1, 2, 3, 4. That shows we're in an uptrend. You want to see that behavior in the RSI. You can see making higher highs, and now you can see that behavior here. And at this point, which I'm going to mark here, now remember, the price went above the 70 value here, and this is where the RSI was warning us that there's a potential topping here, or you should sell because you are in overbought region. But you see that it did not take until several more weeks before we saw that, that pullback that the RSI has warned us about. Now, what I want you to see is that even after the pullback, we still went on to make higher highs. But can you see that the RSI has not shown that behavior? So this is what I mean by divergence. So we have seen the price action continue to make higher highs, but the RSI has not been able to replicate that. So what I want to do is take it out and put it back again, because there's something that's a behavior I'm saying that I don't really like. So let's add it back to the chart. Good. So this is better now. Yeah, this is better. Now you can clearly see that even though price after this pullback made several highs, the RSI has showed a downward trend. So I can easily mark it here. You can see that. Whereas price has been making higher highs, the RSI has been making lower highs. This is what we call divergence, specifically a bearish divergence. So you can have bullish divergence and you can have bearish divergence. The behavior or my concern on the chart, which I first noticed from the volume, is also this bearish divergence. Now, what does bearish divergence tell you? First of all, I want you to know one mistake new traders or new students who are learning technical analysis, once they see this, they just say, oh, we have bearish divergence, I need to sell. But no, it doesn't work that way. This is actually an unconfirmed bearish divergence. It's not yet confirmed because price action can't, like you see, this RSI predicts. It doesn't predict the future. The future might be in a month, 5 weeks, 8 weeks down the line. So you don't get out because you see this. Because you can see, even though this has been warning us about the bearish divergence, price has still continued to make highs. So if you had just run out on the first occurrence of this, you would have missed this much rally. So how can we confirm the bearish divergence? What we typically do is this trend line that reflects the strengths of this current market. You want to see the price action break out. So I would say this line here, this trend here, you want to see the price action break down from this trend and confirm it. Then you know it's time to get out. And that is a signal of market topping. So the market has reached its top. So until that happens, until we see this trend, until we see that the trend is over, this price action can continue to rally back to the top of the channel. What I also want you to see is that initially, once the price action touches the bottom of the channel, it's able to rally up to the top of the channel. One. This is the first move. Second move. Now you can see from this bottom, the price is not able to return. That's where the weakness has been happening. You see the price, the buyers, the market participants have not been able to push price back up to the top of the channel for whatever reason. And this is where there has been weakness in the market. You can see the price is still not able to get to the top of the channel. And that's what the RSI is telling us. That the strength of the market participants is waning. It's waning for whatever reason. And that is what I want us to put in our minds today. I'm not saying you should sell your position. I'm just letting you see that the market has issued an unconfirmed bearish divergence, which signals that the market is about to top. This can go on. Remember, for the market to reach this top, it might go on for the next 2, 4, 5, 7 weeks. We don't know. We can't control the market. Our job as technical analysts is to react and to give lines in the sand. Remember, when the market has stopped, we will see that the candlestick, which is action, will break down from this trend and it will confirm. Then we know, yes, the market has reached its top. Let's also go to the daily time frame to see what message or what the chart is telling us. You can clearly see also again here that although price is making a series of higher highs, the RSI is trending downwards. You see, it's not been able to break this downtrend, even though price is going higher. Now, we can clearly see also that price has met resistance in this area of convergence. That is a combination of this resistance here that I drew on the daily time frame and also this 50% line. So what that means is that you should expect the market to stall a little bit here because this is resistance. Now, what the Fed says this week, how it says it, is it dovish? Is it hawkish? That is going to, be the next form of catalyst that can take the price action much higher or lower. And as you can see, if the Fed comes out with good remarks, I expect the candlestick to break out of this 50 midline and to continue its rally, so hopefully to the top of this channel. Else, we can either see the price action start to descend, test this region here, because this is the new support here. This is the next support. If this doesn't hold, then we should expect price to test this region here, which is also a region of convergence between the monthly time frame and this trend line. So you can see how technical analysis works. If this does fails, then you expect price to come and test this weekly key level. So this is how with technical analysis, you are able to prepare yourself for what is coming. It's not for you to predict the future because you are not Nostradamus. This is a probability. It's telling you what the highest probable occurrence is. Remember, it's not 100%, but that is the most probable event to occur, and that's what technical analysis serves us with. Now let's get to the next section of today's video, where we'll be going through the recap of this week's market performance. Let's commence our market performance recap with the US large cap stocks tracked by the ETF VOO. This past week, VOO delivered a weekly gain of 1.84%, bringing its year-to-date performance at 3.75%. The short-term bias on the daily time frame exhibits a neutral trend, and the mid-term outlook on the weekly chart also exhibits a neutral trend. The Nasdaq, tracked by the ETF QQQ, this week saw a return of 1.30%, bringing its year-to-date performance at 3.60%. The daily time frame presents a neutral bias in the short term, while the weekly time frame indicates a neutral bias in the mid-term. US small cap stocks, tracked by the ETF VTWO, this week posted a gain of 0.77%, bringing its year-to-date performance at 3.53%. In the short term, the daily time frame shows a neutral trend, and the mid-term outlook on the weekly chart is neutral. Canadian equities, represented by the ETF VCN, this week saw a performance of 1.58%, bringing its year-to-date return to 3.25%. The short-term trend on the daily time frame is bullish, while the mid-term outlook on the weekly chart is also bullish. The Nigerian market, tracked by the ASI, the All Share Index ETF or market, saw a gain of 1.22% this week, and year to date, ASI has returned 0.65%. The short-term outlook on the daily chart and the weekly chart is bullish. Oil commodities, tracked by USO, recorded a weekly decline of 3.54%. Year to date, USO has returned 5.36%. The short-term outlook on the daily chart points to a bullish trend, while the mid-term outlook on the weekly chart is neutral. Finally, Bitcoin, tracked by GBTC, recorded a weekly change of 2.06%. The year-to-date performance of Bitcoin is 12.36%. You can clearly see that Bitcoin has outperformed all other asset classes of interest in the market summary. The short-term outlook on the daily time frame is neutral, while the mid-term outlook on the weekly chart is bullish. You might wonder where the opportunities lie currently. To define where the opportunities lie, I typically make use of my smart sheet that I identified or I presented a few weeks back, where we are tracking for momentum in the markets across different sectors. Momentum first can be identified by sectors that have a 3-month, a 1-month, and a 1-week performance that is positive, meaning in the last 3 months, that sector returned an above zero performance. In the last 1 month, it also returned above zero performance, and in the last week, an above zero performance. Some of the sectors currently being displayed on my smart sheet are the financials, aerospace, defense, and the regional banks. So you might want to have a look at those sectors to see where the opportunities lie for those who are interested in individual stocks. But from a sector basis, a sectorial basis, we see financials, aerospace, and defense, and the regional banks has one area with momentum. To wrap up this week's market summary, I can say that the markets are showing a mix of signals heading into the coming week. For US large caps, the sentiment remains neutral both short-term and mid-term, suggesting a wait-and-see approach for now. The Nasdaq and the US small caps are also in a similar position with neutral sentiment across the board. The Canadian and Nigerian markets are standing out, showing bullish sentiment in both the short-term and mid-term, which could present solid opportunities for those looking to take advantage of stronger momentum. Oil is showing some bullish trends in the short term, though its midterm outlook remains neutral. Similarly, Bitcoin is maintaining neutral sentiment short term but has a bullish outlook over the midterm, which should signal some interesting developments ahead. With the FOMC meeting coming up later this week, all eyes will be on the Fed's comments, particularly around inflation and interest rates. Any surprises there could shift sentiment in a big way, so make sure you're staying informed and prepared. As always, guys, keep an eye on these key market indicators, stay flexible with your strategy, and be prepared to adapt as condition changes. Thanks for tuning in. Don't forget to like, share this video, subscribe, and hit the bell button to stay updated with all the latest insights. See you next time.